Welcome to Talk Tickers. We're the place where we break down recent earnings calls to give you the insights you need.
And today, we're diving into the latest numbers and commentary from Fluent.
Right, so Fluent's results, what's the top line story?
Well, it's actually a bit mixed. For the full year 2024, they reported record revenue.
Okay.
Yeah, $103.6 million. That's up about 6.4% year over year. Pretty solid.
But you said mixed.
Right, because the fourth quarter, Q4 2024, saw revenue dip slightly. It came in at $24.9 million.
Okay, compared
to $25.5 million in Q4 of 2023. So, a small step back there at the end of the year.
Interesting. So strong year overall, but maybe some Q4 headwinds. What about profitability on that revenue?
Yeah, that's where things get a bit more complex. Yeah. Adjusted gross profit for the full year was $50.3 million.
Which is what, percentage-wise?
That's 48.6% revenue. Now, that's actually down slightly from the year before, which was 50.9%.
Okay, so little margin compression over the full year.
Exactly. And that compression was more noticeable in the fourth quarter. Adjusted gross profit dropped to $10 million.
$10 million in Q4.
Right, which is only 40.1% of revenue for that quarter. Compare that to Q4 2023, where it's $12.6 million or 49.4% of revenue. Big difference.
Wow, yeah, 40% versus nearly 50%. What was driving that pressure, especially in Q4?
Management pointed pretty directly at price pressures, specifically in the Florida market.
Florida. Okay, why the pressure there?
They mentioned increased inventory levels sort of flooding the market, more supply, prices come down.
Makes sense. And how did that flow through to, say, adjusted EBITDA?
It definitely impacted it. For the full year, adjusted EBITDA landed at $25 million.
Which is down from?
Down from $27.2 million in 2023. And again, Q4 saw a sharper drop.
Let me guess, Florida pricing again.
Seems like the main culprit. Q4 adjusted EBITDA was $3 million compared to $6.9 million in Q4 of 23.
Okay, so a clear picture of annual growth hitting some profitability bumps, particularly late in the year due to Florida.
That sums it up pretty well. But, it wasn't all headwinds. They made some significant strategic moves in 2024.
Right. Let's shift to that. What were the highlights?
I think the big one was probably the acquisition of RIF Capital.
Ah, yes, the New York entry.
Exactly. That gave them a whole operational footprint there. Retail, wholesale, and cultivation.
Sure.
Pretty major for future growth potential in that market.
Huge potential in New York, definitely. What else stood out?
Well, they managed to refinance their debt non-dilutively and on good terms, which is always positive for the balance sheet.
Mm-hmm. Financial flexibility.
Yeah. And speaking of the balance sheet, they closed the year with over $40 million in cash and cash equivalents.
Okay, a decent cash cushion. And total debt?
Total debt was sitting at $82.4 million.
Got it. So the RIF Capital deal, the refinancing.
Yep.
Anything else on the strategic front? Brand development?
Oh, absolutely. In New York, they launched a couple of new brands, Moods and NACC. They said those are getting some good early traction.
New brands for a new market. And in Florida?
In Florida, they introduced their first concentrates line called Higher Kind, trying to diversify the product mix there.
Concentrates. Interesting move, given the price pressure on flower, maybe?
Could be part of the strategy.
Yeah.
Also, their new cultivation site up in Chestertown, New York, apparently is showing really positive early signs.
Like what?
Exceptional yields and high THC levels reported, which is key for that market.
Definitely. Quality matters. What about their store count? Did that grow?
It did. They ended the year with 42 retail locations.
Across which states?
Florida, New York, Pennsylvania, and Texas. And they mentioned plans for 3 more stores in Florida before the end of this year, 2025.
Okay, steady expansion. And you mentioned wholesale in New York.
Yeah, they're building that out under the name Ontarosh, leveraging that cultivation they're bringing online.
It really sounds like a lot of investment aimed at future growth, especially New York and maybe higher quality products.
I think that's fair. And looking ahead to 2025, the big focus seems to be on launching 2 major new cultivation facilities.
Where are those?
One is in Tampa, Florida. They're calling it Rosa. That's targeting Q3 2025 to be operational.
Okay, Florida capacity coming online next year.
And the other one is in Buffalo, New York. They expect the first planting there around June 2025.
And the focus for both is?
High quality flower output. That was emphasized.
Okay, so doubling down on quality flower, even with the Florida price issues, maybe trying to carve out a premium niche.
That seems like a reasonable interpretation. Differentiate themselves if the broader market is competing heavily on price. Management did kind of touch on that.
How so?
Well, they acknowledged the Florida challenges like we discussed, but also specifically mentioned the delay of Amendment 3.
Ah, the recreational legalization measure.
Right. Its delay contributed to the oversupply and competition. So their strategy looks like navigating that by, 1, expanding geographically into New York, and 2, focusing on that premium product from these new facilities.
Makes strategic sense. Pivot where you can. Now, earnings calls often have interesting nuggets in the Q&A. Anything pop out there?
Yes, actually. Someone asked about share buybacks.
Oh, given their cash position and maybe where the stock price is?
Exactly. Management confirmed it's been discussed at the board level. They feel there's a disconnect,
Disconnect between
their market cap or share value and what they see as the company's fundamental performance and asset value.
So they think they're undervalued.
Pretty clearly, yes. And they view a buyback as like one potential tool to address that.
But no decision made yet.
No, they were careful to say no decision has been made. It's under consideration, but nothing definitive.
Okay, interesting insight into management's thinking on valuation. So if you're tracking Fluent, what's the overall takeaway here?
Well, you've got a company that grew revenue nicely over the year, hit a record actually, but
profitability took a hit, especially late in the year in Florida.
right, price competition is real there. But strategically, they're making big bets on New York and on higher quality cultivation. That seems to be the long game.
And management thinks the market isn't quite appreciating that long game yet, hence the buyback talk.
Seems so. It highlights the classic cannabis sector challenge, doesn't it? Growth potential versus market volatility and regulatory shifts.
Absolutely. Always a dynamic space. Okay, let's put on our speculative hats for our This Is Not Financial Advice segment. Any outrageous but plausible trade ideas sparked by this Fluent deep dive?
All right, let's brainstorm here. We talked a lot about New York, right? Fluent's got cultivation coming online there, the wholesale program.
Yeah, big push into New York.
So what if the actual retail rollout in New York hits snags? Maybe licensing for dispensaries gets bogged down, slower than expected.
Okay, so you have product, maybe from Fluent and others, but fewer places to sell it initially.
Exactly, a potential bottleneck between cultivation and the consumer. So the outrageous idea is this. Maybe look at companies involved in the logistics or B2B distribution within New York's cannabis market.
Ah, the ancillary players who move the product.
Right. If there's a limited number of retail doors, but Fluent's cranking out product via Ontarosh, the companies that can efficiently get that product to those limited doors might gain some temporary pricing power or see increased demand.
Interesting. So you're betting less on Fluent directly and more on a potential inefficiency or bottleneck in the broader New York market infrastructure where Fluent is a key supplier.
Kind of. It's a play on the infrastructure potentially lagging behind the production capability in a brand new market. Plausible? Maybe. Definitely outrageous.
Definitely fits the bill. Okay, so recapping our Fluent deep dive. Record annual revenue, but Q4 margin pressure from Florida competition. Big strategic focus on New York expansion and high-quality cultivation builds. And management is mulling over buybacks, feeling undervalued.
A busy year and a lot planned for 2025.
Indeed. And just a reminder, that trade idea was purely speculative, absolutely not financial advice. Always do your own homework before making any investment decisions.
Definitely. So what stood out to you from this call? We'd love to hear your takeaways. Join the conversation.